And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at NickSantiago01. Welcome. This is your daily dose of Daily Market Wisdom with Master Trader Nick Santiago. I'm Kerry Lutz. Today is 12/8/2020. This is show number 172. Well, Nick, the rally is stalling out a bit, huh?
Well, we'll get a little bit of a stall out here, but that's not necessarily a bad thing. When you look at the markets, they've had such a big week last week. To take a little breather is actually a bit of a positive, if you ask me. I never want to see markets go up in a straight line because when they do that, they come down pretty much the same way they went up. So it's always good to see a little bit of consolidation, a little bit of backing and filling, and we're getting that right now. We have the Dow down a couple of points. The Russell 2000, though, continues to go higher, and that's up about 1/4%, and then you have the Nasdaq down about 1/4%, and the S&P 500 down 0.2%. So it's really just a stall for the most part. So we'll see how it plays out, but I don't think there's anything terrible when that happens.
All right. Well, hey, it's just normal back and forth, right? It's just the way the market works.
Yeah, that's just the normal mechanics of the market, normal ebb and flow. And the positive here is the Russell 2000 is green on the screen. And when the Russell's up, that represents small cap companies in the United States. That's always a positive.
Right. Okay. So now we're seeing that HomeBuilders, which are one of the stellar performers, basically since the pandemic shut everything down, looks like that's turning around.
Yeah, the home builders have been struggling, and it's probably partially due to rates going up a bit. But today rates are down. Rates have pulled back a little, and home builders are still struggling. Did have earnings this morning out from Toll Brothers, and that stock right now is getting hit pretty hard. It's down around $3.50, which is about a 7% decline. But we've been seeing some weakness in a few of the home builders recently. I've been staying away from the sector on the long side and the short side just because it was up so much anyway. It was an overbought condition. But we're seeing a little bit more weakness in that industry group today, especially on the back of Toll Brothers' earnings report.
Hey, I got to tell you, like in my little neck of the woods here in northern Palm Beach County, and I'm in a newer community, they still got about 50-60% more to go in terms of lots available. But every lot that I see in the older section, which is only a couple of years old, is sold, and there's probably 15 houses going up at once. Normally, before the shutdowns and everything else, you were looking at 2 or 3 houses under construction.
Yeah, I definitely think that might be not only your area, but I think a Florida deal. We're getting a lot of building going on in Florida right now. People are fleeing these other states, and they are coming down to Florida. So I think that might have something to do with it. The construction here has been just really off the charts, if you ask me. Even if I want to get something done in my home, these guys are backlogged right now, and new construction is going up everywhere. So that might have something to do with it. But overall, remember the stocks, they talk a little bit earlier than everybody else. So if you remember back in 2005, 2006, when the real estate boom was really going on, and everybody, had to have a piece of property, and they were buying homes left and right. That it looks like the market topped out in around 2006, 2007, but the actual home builders topped out in 2005, and they're always a precursor of things to come. Now, we're not at that climactic state yet, but it's definitely worth keeping an eye on.
All right. Hey, so you saw the rumors that Goldman Sachs is going to move a major division perhaps to Florida?
I had not seen that, but it doesn't surprise me. I have to think everybody is going to flee New York and New Jersey anyway. I don't even know why anybody is even there. But I'm not at all surprised by that action. I'm not sure why they chose Florida, but it wouldn't surprise me. It wouldn't surprise me to see more brokerages leave New York.
Well, they're debating between Texas and Florida, but you already saw Icahn, a New Yorker his whole life. His companies always based in New York in Westchester County. He's moving down. And then the Elliott Fund, Elliott Management, Paul Singer,
Mm-hmm.
he's
Yep.
moving down. It seems like I think they'll have to put up a sign on the George Washington Bridge. Will the last person who leaves please turn out the lights?
Well, there's a lot of hedge funds also based in Connecticut. I would think that they would probably start to leave soon too. And again, when you see what just happened to the Northeast, I don't even know why anybody does business there at all.
And, like a lot of companies back during the crash 10 years ago, hedge funds in particular, they didn't move, but they started offices down here in Florida and in Texas, other tax-free states. And there was like a gradual move of employees, of divisions down here that was really under the radar. But man, once Wall Street and the financial sector flee New York and the Northeast, it's all over for them.
It is, and I really think that is the exodus has already begun. So it's not only with the Wall Streeters, it's also with the people. I see so many people looking to get out of there. If they can move their business, they're going. If they can transfer their job, they're leaving. And you see the big Wall Street institutions start to flee. It really is over.
Yeah, and if there is ever a business now, especially because there's no real physical exchange anymore, the New York Stock Exchange is just a big backdrop. It's a screen set. Nothing really happens there. It's just for when they need a shot of the market, they go to the New York Stock Exchange. So you don't need a physical exchange. Really, the number of people that need to be together in one room, do you really need a trading floor anymore?
No, you don't need it, and you haven't needed it for many, many years. I know the case has been made that it's always better to have a human behind it, behind the transactions. But the reality of it is Nasdaq has been digital for a long, long time. The NYSE is pretty much digital as well, and you don't really need it. Will there be a physical presence somewhere, brick and mortar presence? I'm sure there will be, but you really don't need it.
Yeah, so, and the New York Stock Exchange was really like the last one, the last holdout. The Amex, American Stock Exchange, was absorbed by the New York Stock Exchange. I mean, do we still have like a Philadelphia Stock Exchange and I know all these cities had their own stock exchange. Kansas City, I guess, had one. Do we have them anymore?
Yeah, we still have them, but again, they're very, very minuscule. They're not what they once were 30 years ago. Now they're just, basically symbolic. They're like a symbolic presence. So, again, there's really no need for it. It's really not even necessary. I hate to say that because I always thought the open outcry system was pretty neat to see. But, there's really no need for it.
Yeah, I loved like the pecking order. Everybody had a different color jacket, and depending upon the color of your jacket, depended on your position in the pecking order.
Yeah, that's kind of how the pit trading was, and the history of it is pretty neat. If anybody's a student of market history, but the reality of it is, with modern day history and technology, these things have gone by the wayside. So it's unfortunate, but that's just the sign of the times that we're in.
Yeah, it's kind of antiquated and a little bit anachronistic. And yeah, we used to have the Commodities Pits in New York and in Chicago, and you'd have those guys would go crazy. It was like I remember having to go down there a couple times to serve some documents and meet with some people, and it was just pure pandemonium on the floor, just screaming, ranting and raving, and somehow there was order from the disorder, but I never quite understood it.
Well, that's why I say it is a lost art, and again, it's sad to see that the way it's going, but and I think in 5 years everything will be 100% automated. They could have just one place with all their computer servers, or a couple of locations with computer servers, and they're not going to need anybody really to man the desk any longer.
Yeah, really, they don't need it now, but I guess it's for nostalgic purposes, and that property there at the New York Stock Exchange will make a hell of a condo development one day.
If you could get anybody to buy New York City real estate.
Yeah, well, that's the if, but I guess there'll be a market for it. I don't know. I don't see how the city doesn't go bankrupt, but that's for another day. Gold and silver up again today.
Yeah, today, it's not up a lot now, but it's had a good little pop recently. And today, when you look at gold futures, up about $4 right now, trading at around 1870. Like I said yesterday, I think gold can go to 1900, but I do think it's going to stall out there. And then you have silver a little bit higher today as well, I believe right now. Silver futures are actually lower by 12 cents, so they're down a touch. But they've had a good little run as well.
Yeah, so this rally is going to stall out. Is it going to stall out like right around the holiday break, do you think, or the week before? What is your thought here?
Well, there's next week we have options expiration. So this is, who knows the shenanigans that go on during options X. So the 18th of December will be options expiration for the month of December. It's also end of quarter. So you got to be a little bit careful there. I have this rally penciled in to go to at least Christmas to New Year's, and then we'll get some backing and filling. But, could we see something next week with options X? Anything is possible. I wouldn't rule it out. We got some lunar phases next week. We also have a solar eclipse on the 14th with the new moon. So, sometimes you get these big moves around new and full moon, especially around the time of an eclipse. So we have to be aware of that. And right now, with the volume trends being as light as they are, I have to think the markets are okay. If volume trends pick up, then I start to get a little bit cautious.
And let's not forget on the 21st, the Christmas star. That's where Saturn and Jupiter get so close together that they see them in the sky. You can't differentiate them. They look like a star, basically.
Yeah, that's right. And that's what we call a conjunction. And we're going to have that conjunction. By the way, that only happens once every 20 years that those two get together like that. So that's a pretty big phenomenon. I call that one of the 20-year cycles. Gann used to call it one of his grand cycles. But this year is a little bit special because that Jupiter-Saturn conjunction actually takes place on a winter solstice. So it's a really, really a big astro event. And again, I'm really looking forward to it.
The winter solstice. So just explain to us about solstices, equinoxes. Those are significant, especially when you get this type of event.
Yeah, like I teach in my Gann course, a lot of times when we get to a solstice or an equinox, the winter solstice being the next one, which will be December 21st, sometimes it's often a turning point for the market as well as it is for the Earth where you go into a new season. So again, you always want to watch that. It's a very, very critical and important time period for traders. So I know a lot of traders probably think, wow, this guy's off his rocker, he's esoteric, but I've called many, many major turning points on equinoxes and solstices throughout my career.
So you think we'll have a major one here? Well, I guess, and there can be earth changes, there could be cataclysmic flooding and earthquakes. That often happens on these solstices and equinoxes, right?
Yeah, especially with the monster conjunction like you have between the two largest planets. Right now you have Jupiter and Saturn, Jupiter being the largest planet, Saturn being the second largest planet. They're going to have their conjunction, which only happens once every 20 years. May I mind you, if you go back 20 years from where we are now, that brings you to the year 2000. Everybody knows what happened back then. So it's a very, very important time period.
All right, so keep your eyes on the sky and keep your eyes posted or locked on your portfolio, because this could be a really major event. We've got other things happening in China we don't need to go into, but if things really get crazy, this could be a major turning point, not just for the market, but for the world as well.
Absolutely. I agree 100%. And I know we've talked a little bit about it prior, but yeah, this is definitely a big event. Sometimes it doesn't always kick in on that day, but remember the astro sciences have what we call shadows. You got a little shadow before, a little shadow after. So again, 2021 is going to be a spectacular year, up and down. So just brace yourself. If you think 2020 was was something. You have no idea what's coming.
And that's all the more reason why you should go over to inthemoneystocks.com. Sign up now so you will get Nick's 2021 market perspective and forecast for the coming year. Check out the Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Email us, kl@kerrylutz.com. Nick, we'll talk to you tomorrow.
Sounds great, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.